All right, guys, I have some real losers in my portfolio. Two of them reported this week. So I want to talk about why am I holding on to these companies? These are companies that have been in the red for years in my portfolio. I've been wanting to sell out, but I hold on. I don't know if that's the right thing or the wrong thing to do. I'm going to make my case for why I plan on holding them still, even though one had some not so good earnings, the other one had some decent earnings. The third one doesn't report till February, so I will do an update on that one when it comes. Of course, the three companies I'm talking about, here's my portfolio, are AT&T, Warner Bros. Discovery, and 3M. So AT&T and 3M reported this week. We're going to look at their financials and why I see some positives here. Warner Bros., I'll just give a brief overview at the end, but these three companies are the ones that I do want to sell out of. Of course, real estate, you'll see, has gone down, but I'm bullish on those. So I don't care if they go in the red. I get to add more at cheaper prices. But the three I'm talking about, I want them out. So really, I think this is half of me wanting to get out in the green with these three, having that hope. And the other half, though, is I do see some positives, like I said, and I think being patient will pay off. So let's start with looking at AT&T's financials. They just reported, and we'll start with their income statement. We will see that their total operating revenue actually went up when looking at the fourth quarter and the year end comparing to the prior fourth quarter and the prior year end. Went up 2.2% quarter-wise and went up 1.4% year over year. Now, these are very small gains, so nothing to be impressed with, but hey, a gain is a gain in one of my duds of a company. And then when it comes to operating expenses, they have gone down massively. So this is something I like to see. So the overall net income has gone from a negative loss to now an actual positive, so an actual income in both the fourth quarter and year ended numbers. So this to me is really good. Overall, I'm really liking what I'm seeing so far. Then if we move to the balance sheet, the thing I want to start with is the cash. I am seeing an increase in that cash and cash equivalents. That is a good sign. If we keep going down, I want to compare the total assets to the total liabilities, and we'll see the total assets are going up and the total liabilities are going down. That's the trend you want to see. So another positive, and that long-term debt, this is the crutch for AT&T. This is what management has promised to cut down, and we'll see it inch down a little bit. I want to see this accelerate in its decline, so I'll take it, but I want to see this accelerate. So overall, a good balance sheet as well. I'm very happy with this. Now let's move to the cash flow statement. Now the only thing that I want to look at really is the cash flow from operations and that free cash flow, which is taking that cash flow from operations minus that capital expenditures. So we'll see the cash flow provided from operating activities went up. That's a good sign. And the capital expenditures went down. That's a good sign. So both are moving in the right direction, which means free cash flow is increasing. That is important. That is such an important metric for a company. Those free cash flows are what pay the dividends, get reinvested back into the company in many different ways. That's what you want to see. So that is great. And we'll see a little bit more detail on that free cash flow in a little bit. Now, if we move to some supplementary financial data, I want to show you that debt ratio, because we did see the long-term debt going down. So we're also seeing that debt ratio go down, which is a good sign. The other thing, they're really taking control of their expenses. One way to do that is by cutting employees, and they're doing that. They're laying off employees or whatever they may be doing to reducing it. It went from 162, almost 63,000 down to 150,500. That's unfortunate for the employees, but as an investor, this is great for the bottom line. I like to see this. Then I want to show you the segment results. So what I see here is mixed results, but their biggest part, the mobility, is growing, and that's what I want to see, which created overall revenues increasing 1.4% fourth quarter of this year versus last year, and 0.8% this year versus end of last year. So this is good overall. It's not strong, but I'll take it. Then we want to look at subscribers. They've had some subscriber growth. Verizon did as well. They also reported this week. And so we're seeing that subscribers are going up for the mobility segment, 11.1%. That is fantastic. They also wanted to highlight that they had 1.7 million postpaid phone net adds and 1.1 million AT&T fiber net adds. So again, the subscribers are going up, the net adds are going up of these different areas of their business. this is what you want to see. So really there's a lot of positives here. Of course, some parts of their businesses, like we saw, are slowing down, but the big one, the mobility, is going up. And then if we look at the free cash flow in a different way, we'll see here that it is going up. It's improving. So over the fourth quarter year over year and the year end year over year, we're seeing improvement, which means that free cash flow dividend payout ratio is declining, which means it's more affordable. So therefore, I think the dividend is getting safer and less at risk of a cut. I do think it's safe though regardless at this point, but this is making it more safe. Then we look at the margin, the operating income margins, shall we say. This is a metric we want to see improve. It means they're becoming more efficient, more profitable, and so we're seeing that they're improving here. They're still in the negative, but they're getting less in the negative range. So really, AT&T, they were good earnings, but their stock did go down. Why did it go down? Well, the lead cable concerns, I made a video on this before. There's some old lines that are full of lead that are contaminating or posing potential contamination issues. The fears are rising again around that. I don't think that will become a huge thing for AT&T, but something they'll have to manage. And then we see that if you don't put out wow earnings nowadays, if you don't knock it out of the park, if you just barely beat, you're going to get punished in this day and age with investing. So that's kind of why it went down. And they had a slight miss with EPS. I don't like to really look at if they miss or beat. I just like to look at the financials. That tells me a lot. So what I see is improvements in margins, improvements in free cash flow, improvements in CapEx, improvements in subscribers. I'm really pleased, and I do think that this momentum will continue, and the guidance that they put out is pretty solid, and they also stated that this momentum will continue to move into the positive with growth and positive metrics in all the areas that I just mentioned. So AT&T, I actually give a thumbs up. I really think they are moving in the right direction. The big thing for me is the pay down of that debt and the increase in that free cash flow, and that's what's occurring. That's why I'm holding AT&T. Now on to 3M. Let's look at their income statement. We'll see that their sales are declining. So first off, we're not seeing something positive, unlike we did with AT&T. Then I want to point out the operating expenses. Now, quarter end of this year versus last year, it went down slightly, but look at the year over year comparison. Those operating expenses exploded. So maybe they're starting to get a handle on that, and that's why we're seeing the quarter versus quarter improve. But this is something they need to continue focusing on in order to improve their financials. And then we come down, we look at the net income, or shall we say net loss. We do see that their net income improved again, the quarter, comparing the quarters, but year end, it went from a positive last time now to a loss. So that's not the right direction to move in. As well as the earnings per share did go into the negative for the year end of 2023, did improve slightly with the quarter. So we're seeing that they're making some momentum when you compare quarter of this end of the year, fourth quarter versus last. But the year over year is not great. So maybe they're starting that actual trend, which I believe they are. And that's one of the reasons why I'm holding, but I'll talk more about that in a second. Then I want to look at the balance sheet. We'll see that cash and cash equivalents is increasing. So hey, there's a positive. Total assets are increasing. That's a positive. Now total liabilities though are increasing as well and at a much faster rate. I do not like to see that. Your liabilities should not be outpacing the growth of your assets. They should be going down, or at least growing at a very small amount that doesn't overshadow that asset growth. Then the long-term debt, it actually went down, which is good, but the other liabilities went up massively. So it created this situation where, again, the total liabilities is increasing at a much faster rate than the total assets. Total equity went down, so another negative sign for me. But overall, the balance sheet has very few positives, but mainly more negatives. Then if we look at their cash flow statement, so net cash provided by operating activities did go up, and their purchase of property, plant, and equipment went down. Again, this is how you calculate that free cash flow, and so their free cash flow is improving, so that's a good sign right there for me. Then if we look at the worldwide sales change by business segment, we will see here they all are declining. Those sales are not improving. So that needs to turn around. That is a big negative for me because if that continues, that will impact other areas like that free cash flow that's starting to improve and the other improvements that we're seeing. So for 3M, operating margins, they are improving. They are focusing on restructuring to increase efficiency and focusing on spending discipline, which I think we're starting to see the beginnings of the improvement, but will it stick? I don't know. I need to see years of this positive change to know they are going in the right direction, not just one quarter. So for me, the other big negative is all the litigation that even though their free cash flows are starting to improve, those free cash flows, majority of those will go towards these litigation issues for the next decade, right? It's just, you don't want that. You want your free cash flows going back and reinvested into the company, paying that dividend, buying back shares, all that good stuff. So I really don't like that. Now for both AT&T and 3M, I believe their dividend is safe for now. We want to continue to see this direction of free cash flows improving. I see two companies that are dominant in their respective industries, so I think they have staying power and I struggle with them, right? Because I haven't sold them, I want to sell them, but I'm choosing to hold. Now I may add and lower my average to 3M if it goes below $90 per share. AT&T, I don't have a price target for that one, but right now I don't plan on adding. Again, I think AT&T is moving in the right direction. 3M is trying. I can't say that for just one quarter of data going in the right, kind of with the positives that we're seeing. There's still a lot of negatives, so it really hasn't developed yet. But I need more evidence to be confident in continuing to hold 3M. AT&T I will hold. I think I will be able to sell in the green. 3M is a big question mark at this point. So let me be clear. I don't like either of these companies. I am choosing to hold so I can sell someday, hopefully in the green or less in the red, so I can invest them in better companies. But I need to be patient. Patience is the best thing you can have as an investor, trust me. And I will be watching these stocks like a hawk to see when I should sell. Now that might be years down the road, but I'm still going to pay attention to every earnings and just really follow these companies. But it's just not the time to sell right now, in my opinion, and let me know if you disagree. I am totally okay with that. That's what we're all here for, to help each other and just give opinions so we can think of outside the box, which is you guys. You're my outside the box. I'm your outside of the box, presenting different viewpoints, shall we say. So I will collect their high dividends in the meantime and invest them elsewhere into other companies. So now let's talk about quickly Warner Bros. Discovery, my other company in the red that I want to exit someday. Now, of course, I acquired this when AT&T spun it off, so I didn't buy it, but I decided to hold it. It's been in the red since day one, pretty much. They won't report until February 22nd, so I will definitely do an update then. But I do like this company. I repeat, I do like this company. I do use the streaming service Max, and I really like it. And I know a lot of people that like Max. I think they have very high quality content. I think it does have a solid path for growth, but it will never be a Netflix. We just have to be honest with ourselves. But I do feel it'll be in the top 3 streaming companies out there, so it'll take up the top 3 market share. Eventually, it will just be solid in that spot. So I'm holding and think I will add below $10. That's my price point to lower my average. So I will rate these 3 with Warner Bros. Discovery in first place, then AT&T, then 3M. So in other words, I'm more bullish on Warner Bros. Discovery and least bullish on 3M, and AT&T is in the middle for me. So let me know if I should just sell these losers, these companies that have been in the red for years for me, or do you think I'm right to hold and just have patience, as there are signs of some positives. There's not signs of destruction, right? These companies are not just, they're not going out of business. They're not going to be closing down. They're solid in their respective industries, like I said. So these slight setbacks, I do think they will turn around. AT&T is already proving now for a few quarters that they're going in the right direction. So I don't know. These are the reasons I have not sold, but I want to someday. I hate seeing these companies in the red for all these years. So I will keep you all updated on these. And I want to know, do you hold any of these companies, and what do you plan on doing with them? Because I struggle, but with what I'm seeing, I'm holding. So yeah, let me know. I'd love to hear. Let's start a conversation. And that is all for today. Thank you so much for joining me. I hope you guys really are enjoying my channel. I've got a lot of subscribers over the last year. I'm very grateful, and I want to keep growing. So let me know what you all want to hear, what you like, what you maybe want to see different. I'm open, and be sure, if you're new to my channel, to subscribe, give it a shot. With that said, you guys have a good one, and we'll see you soon on Mark Arnold's Finance.